Good morning, let's take a look at what's happening in the European and global markets today. Asia started the week on a cautious note and has since turned more negative, although there doesn't seem to be a clear reason for the risk-off sentiment. Most regional share markets are slightly lower, as are Wall Street and European futures. While Treasury yields have risen slightly, the dollar has lost ground against the yen. Oil prices have also slipped further, while gold has reached a 6-month high above $2,017 an ounce, although there doesn't appear to be any fundamental factors driving these moves. China's central bank has announced measures to encourage financial institutions to support private companies, including being more tolerant of non-performing loans. However, the market doesn't seem impressed, and China's blue chips are down around 1.2%. There have been reports about official steps to support the property sector, such as whitelisting companies for loans. But so far, it's mostly talk rather than action. On Thursday, the official China PMI for November will be released, and analysts are expecting a small pickup, possibly above 50.0. As we approach the end of the month, investors may exercise caution due to the significant gains they have made. Japan's Nikkei and the S&P 500 are both up more than 8% so far in November, which would be their best performance since mid-2022. According to LPL Financial, about 55% of the S&P 500's component shares are trading above their 200-day moving averages, the highest share in nearly 2 months. The oil market faces a tense few days ahead of the OPEC+ meeting on November 30th, which was postponed as producers struggled to reach a unanimous position. There are reports that African oil producers are seeking higher caps for 2024, and Saudi Arabia may extend its additional 1 million barrel of oil per day voluntary production cut, which is set to expire at the end of December. Brent crude prices have fallen another 0.8% today and are down 8.6% for the month so far. If this trend continues, it could be beneficial for the battle against inflation and consumer spending power. On Thursday, the Federal Reserve's preferred measure of inflation, personal consumption expenditures, will be released. It is forecasted to dip back to 3.1%, partly due to falling gas prices. The core inflation rate is expected to ease to 3.5%, its lowest level since mid-2021. Data on EU inflation is also due on Thursday, including measures for Germany and Spain. Core EU inflation is forecasted to be 3.9%, the lowest since the middle of last year. If this prediction holds true, it will support market expectations of no more rate hikes and potential policy easing in 2024. Futures currently imply around 80 basis points of cuts for both the Federal Reserve and the European Central Bank, starting in June. This week, there will be several opportunities for central bank officials to provide insights into their monetary policy stance. Fed Chair Jerome Powell will speak at a fireside chat on Friday, and there are at least 7 other Fed speakers scheduled throughout the week. European Central Bank President Christine Lagarde will also address the EU Parliament later today. Here are some key developments that could influence the markets today. European Central Bank President Christine Lagarde will speak at the Econ hearing before the Committee on Economic and Monetary Affairs of the European Parliament. The UK CBI distributive trades data for November will be released. The US will release new home sales and building permits data for October. That's all for today's market update. Have a great day.